Hi guys, today I will talk about 5 reasons why 90% of the traders lose their money. So, first of all, if you haven't subscribed to the channel, please subscribe to the channel and also like my Facebook page. I'll keep on posting some educational videos and some sharings of why I lost so much money in the first 8 years of my investment career, okay? So now I'm better off, so I will share my mistakes so that you won't make the same mistakes. So please subscribe and like my page, and please give me a thumbs up and also share this video to your friends if you find it useful, alright? So after 20 years of my investment experience, investing career, so there are 5 things I can conclude why 90% of the traders lose money. At least you have heard of this, right? So why is that? So most likely, there's only one thing that is core principle that makes 90% of the traders lose money. The core reason is about fear and confidence, okay? It's too afraid of something and then being too confident of yourself. It's always bouncing in between these 2 things, okay? So that becomes a bull market and a bear market. Because the bull market and bear market is made by us. It's not made by economy, right? Economy is something that's really stable. It's always GDP, always 1%, 3%, and then if bad times, it's only 0 or -1 at most, right? So it's pretty stable. But why the stock market is fluctuating like that is because of us, alright? So that makes 5 reasons why 90% of the traders may lose money. The first reason is pretty common. It's when you need the money, you always find some stocks and something in your portfolio to sell, right? The first thing you come across your head is to sell something that is profiting and keep those that are losing money. Why? Because it's always what we are being educated. Most likely, we're going to sell something and then the cash is in our pocket and then literally we'll hold the cash, okay? But for those who are losing money, as long as we are not selling them, right? Then in book value is losing money, but in fact in our cash account is not losing money, so we can forget it. But that's really wrong, because there must be reason why your assets or stock is profiting, but those who are losing money must have reason why they're losing money, right? But if there's reason why behind the profiting stocks and the stock that are losing money, then you must be selling something wrong, okay? So in fact, in the end, most likely, then the stock that you took profit from, and then the price of them will keep on going up. And for those you decided to keep them, they will keep on going down. So that is pretty bad, because then you will be holding no cash. With everything inside stocks that are losing money, then you are all tied up, okay? So when chance comes, you have no money, you have no cash. When the stock index going up, your stocks will be underperforming the index, and then you are left with nothing, okay? No chance to profit money, and then you're left with a hold of debts or hold of losing money. The second reason is overtrade. Now, there are a few reasons why people overtrade. First of all, too confident. The second one is too impatient, because if we are too confident, you tend to be overtraded, okay? That's pretty linked up with the psychology. You heard of the MBTI test, right? If you are more likely to be an extrovert person, that day you come across meeting some friends, you're pretty excited, you're pretty pumped up, you're most likely going to overtrade. That's fact, okay? So if you tend to profit for a few times that day, okay, you'll make few more trades, okay? So that's something like you will do in casino, because you win, you will just keep on betting, okay? But that is kind of different story in the stock market, all right? So the second reason is kind of impatient, okay? So you tend to wait for a chance to come. You have your channel and you have your wave theory all set at that price. When the chance comes, you might only buy 10 shares of that stock. But when the chance comes, you're thinking, oh, I've been waiting for this time for 7 days. Why not I just buy a little bit more? That's wrong. Remember, for myself, every plan that you have made changes on that day, that specific moment, most likely you are going to make a wrong bet, and then most likely you're going to lose money, because the most rational the time is the time before you make the decision. So you have everything planned out, just execute it. Just be disciplined. Don't change your plan, okay? You want to sell it, just sell it. Don't oversell it. Don't overbought it, all right? So that is something why 90% of the traders lose money. The third reason is to buy in and invest something just randomly. What does that mean? So when the chance comes, you heard of this stock, it has a bright future, and you look at this chart, has a good buying signal, and you just buy anything. But what is a good trade? A good trade is to calculate the ratio of profiting and losing money, okay? So if you have calculated this so that you will invest in something that you know the potential target is at what price, and then the potential cut loss is at right price, okay? That is nothing to do with skills, right? If after you have skills, at least you have to do this calculation. If the ratio is at least 2 to 1 or 3 to 1, I will make this deal. If that ratio is only 1 to 1, that's not attractive at all. Sometimes we know it in our head, but when we execute, we just set the cut loss so far away, but we didn't even realize, right? When the chance comes, you will find out, oh, why I lose a lot of money, but you have no time to dig into the transaction and find out the mistake, right? And most likely you are going to make the same mistake in the future. So you're leaving a bug in your system, in your portfolio in the future. So your structure and trading strategy will never be optimized. The fourth one sounds pretty stupid because we always forget the cost, okay? The cost of what? The cost of commissions, the cost of tax, and also the cost of timing, all right? So let's talk about the commission and tax, okay? So most of us will just look at the chart and then we will just say the profit to lose ratio is 2 to 1. But if you're trading some stocks that are really expensive or something that is cost you really much, you really have to kick in and take the commission into account so that you will have the optimal and most realistic profit to loss ratio, okay? So when you have that, you can do the trade. But most of us will forget about the time. Time is the most important resource and the most expensive cost that you can make. So that's why if you can do a long-term investment and be a shareholder, and then you can just sleep and do your thing, and then you can wake up and then your portfolio will be going up day by day. That's pretty good, right? Because you're not losing your time and then you're also profiting. But if you want to do active income, like you will look at speculation and you will look at the chart minutes to minutes, like 5-minute charts, that's okay, that's your thing, okay, that's your skills. But for me, I will tend to less likely to do any speculation because I cherish my time as a really, really important resource. Because also if you spend your time unwisely, and most likely you will be really frustrated, you burn out, and then it affects your decision. It's something like psychology, but it's really, really important for you to think about that. The fifth reason is we always need to ask, is it bottom? Is this the peak? Okay, we need to know 100% of the time, 100% that what will happen tomorrow, okay? So think about that. It will never happen because you can guess, you can anticipate, you can speculate, you can calculate, you can do statistics, but you will never for sure what will happen tomorrow, okay? But you can always think that the chance will be higher for the stock of an index to drop tomorrow and for the next month. But we will never be sure, right? So that we know the higher chance, the higher danger, higher risk that you will drop, then you can choose to reduce your portfolio holdings, okay? You can choose to reduce. You will never about selling all of your stocks and then buying all of the stock together at the same time. It will never happen to you and should not happen, okay? So whenever you think that it's higher chance that this is the bottom, and you can buy a little bit more. And then if it breaks above any trend lines or gain or something like that, you can buy another more. And then for the last bullet, you can wait for the last signal and you can take in all, okay? So it's not 0 and 1. It's not on and off. The strategy is a spectrum. It's a spectrum. It's the skills that we need to master. If a higher danger, we can always choose to hold more cash. We'll never think of the market as 0 and 1. If we do that, we'll always lose money. So the art of distributing your cash and the art of managing your portfolio like a spectrum is really a key to your strategy because skill sets are really easy to be learned, okay? But strategy and discipline is something that's not mentioned in the book. So if you have any question, please leave me some comments and questions in the comment box below. And if you find it useful, please give me a thumbs up and also share this video to your friends. I'll see you next time. Investing made easy. Goodbye.